Welcome to the 2022 Economic Depression and Preparation Channel. I'm your host, Tony. Thank you for joining me on this Sunday edition, September 11th, 2022. Special tribute and shout out to all those families and first responders and all of our police, fire, NYPD, everybody in every city, Chicago, New York, LA, Miami, DC, who are first responders, and those people who are serving our country today. We remember this has been 22 years now, 21 years now later, and since September 11th, and here we are. We're in a race now with the economic race. As you know, the economic race is not a sprint, but it's a marathon for everybody, every generation. And now we're going into, as we head into these last couple of months here of the year, 4 or 5 months, and into winter, it's going to be absolutely critical that we continue to help our neighbors, that we continue to prepare individually and collectively for what is about to come, in every facet, politically, spiritually, economically, and socially. So please be sure to subscribe to this channel. I thank you all for your comments and supports, and I will continue to bring you to interpret the news as we see it here on the Preach to Me channel. So let's get right into it, ladies and gentlemen. The first thing is first, CNBC.com is reporting that economists are divided on the risk of a U.S. recession and the jobs data isn't helping. We should note that the recession is defined as 2 negative quarters of GDP, at least academically defined as that. We've already experienced that on the table, but as you know, the media and political divide has spun it to say that, well, it's just a slowdown of GDP. However, the global data reflects that, according to economist.com, the magazine, that GDP is slowing down globally. So it's not just the U.S., in the Western countries, it's also Asia markets, the BRIC nations, developing countries. All of that is slowing down as well. And what's confusing is that the jobs data, we're seeing all these open jobs here. We're seeing, we have over 300,000 open jobs available, and nobody's taking them. They're saying that they have all these now hiring signs, and you guys have seen it, from the bus stops, bus drivers, to fast food restaurants, to hospitality, to utility companies, to everybody saying that they're hiring. They're quote unquote having these shortages, and they're saying that people are doing this quiet resignation, this, what they call it, the quitting quietly. I don't know how you do that, but apparently that's what we're going on right now. So they're pointing to low unemployment, high job vacancies, and the fact that the economy is quote unquote growing, just not as fast as the prices. So, ladies and gentlemen, when you have inflation growing faster than your wage growth, then you have a major problem. This is the same thing that happened back in 1920s and the 30s. We had hyperinflationary tendencies, right? And we had wages not growing. They were actually depressing, going down, so people couldn't afford things on the food shelves, on the gas shelves, etc. So we're heading toward that right now. But like I said, with a $15 trillion U.S. economy, it's like a slow roll down the snowball down the mountain. So it takes long for this to come effect. So this coming year and this winter and this coming year, we're seeing the effects of that. We're going to see more layoffs. And this the U.S. economy, not only U.S., the Canadian economy, the U.K. economy. As you know, U.K. inflation right now, United Kingdom, you guys are above 15% inflation, real inflation, already. And we're going to be heading that way too, as well as production slows down. So Americans are feeling poor for good reason, quote unquote. MarketWatch.com. Household wealth was shredded by inflation and Fed tightening. Listen, many people have dipped into either their savings, their not just their savings, but many people have dipped into their 401ks, their home equity loans. All of that was the year before. That was last year or the year before, 2020, to kind of keep up with this inflation. And now that the Federal Reserve Bank is committed to tightening, we could see a full 1-point rate hike in the next meeting in September 20th here by the Fed. Net worth falls by $8.7 trillion as the stock market crash offset gains in house prices. And now house appreciation is slowing down. It's not as fast as it was a couple months ago. So, those of us who, own homes, and you saw it shoot up, to record values worth, $400,000, $500,000. Now it's starting to slow down. The month-on-month appreciation. And houses are taking a long time to sell now. According to research, we're seeing houses on the market for longer than 3 months now. And the price drops have been $10,000 or more every month. Record drop in real wealth, as you can see here. Household wealth has been dropping down negative now for the last 2 quarters here, just as we predicted. and adjusted when adjusted for inflation. And so when wages are not keeping up, it doesn't matter how many jobs you create if the wages don't keep up with the inflation. Inflation right now is at 10%. Shadowstats.com is reporting real inflation at 18% or 19%, and that's evident. Gas prices come down a few cents, but we know it's going to raise again after the midterms because of what's going on. Additionally, we know that with the student loan forgiveness and other things, we know that inflation is here to stay and is going to get higher because of all the money printing. And it's unfortunate that we didn't get the infrastructure bill passed, because now we're going to see the workers who are working in these fields to help our infrastructure, they're going to be striking. Look at this, CNNbusiness.com. Massive rail strike next week could deal another blow to America's economy. So workers are unsatisfied. You know what comes next. Strikes, social unrest, a lot of riots in different cities, shutdowns, either planned, either intentional shutdowns, planned shutdowns, or not. So that's why I say you need to have your solar generators, all kind of cooking stove and everything, because even though the grid may not go down, the grid may not go down, you can have what we call brownouts. So you can have 2 or 3 hours without power because of people striking, or, somebody not coming into work, or the system going down in the various parts. So now we have 90,000 workers of the nation's freight railroads has the business worried. So a strike, they propose to go on strike September 16th. It could bring nearly 30% of the nation's freight to a grinding halt. And you have to remember that these unions are going out of style. They're being defunct. I know Starbucks and other companies are doing unions, but now a lot of these big businessmen, the billionaires and trillionaires, they don't want to have unions because they don't. This is exactly why. They don't want strikes. They don't want to pay fair wages. They don't want to pay pensions no more, or health benefits. And so because of this could mean, quote, empty shelves in stores, temporary closures at factories, higher prices due to limited availability of various consumer goods. Now, I'm not going to be doom and gloom. I think that there will be some closures at the factories, but because we still have the trucking industry going strong right now, at least on some of these interstate highways, I haven't seen as many trucks, but there's a decent amount of truckers still shipping goods and services. I'm going to say that we're not going to quite see empty shelves. It's just that it's going to take longer to get these products on the shelves. So we can say 1 or 2 week delay for a lot of the orders and stuff like that. So we're going to be back ordered. So that's what's going to be happening here. Time is running out. Of course, they will, try to strike a deal, but this is going to happen in every industry, whether you're in railroad, shipping, car industry, house industry, insurance industry. We're gonna see more workers disgruntled and unsatisfied. Not because of they don't love their job. It's because of the conditions. The wages are not keeping up with inflation, and this is the result. And all of the inputs needed to gain a decent wage and a decent living are going to be cut from the system. So the good news is we still have much time to prepare. President Biden and Jerome Powell are giving us time by keeping the economy afloat, not just the stock market afloat, but keeping the economy afloat by buying bonds and treasuries, and also keeping the housing market afloat by keeping the rate somewhat low. You have to remember in the 1970s, for Paul Volcker, the interest rate was already at 18-20%. We're only at 3-4% now, the Fed funds rate, and it's going to go up. So we're getting there. So that is a normal rate. Back in the day, a mortgage rate, 30-year mortgage rate, used to be considered normal, 5-6%, 7%. That was like a normal rate. But now, we've been at low rates for so long. People were getting 2%, 2.5%, 2.7% rates on 30 years, 2 or 3 years ago before the pandemic. And now that it's going up, things are going to be a little bit more tight. So the good news is we're not going to go into a complete collapse, but we are going into a long drawn recession. And that's going to start this winter and going into next year when we start seeing the transition of this economy from a service-based economy to an automation and technocratic economy. And that's going to be the beginning of things and the beginning of job losses and all of that going on. So be prepared, stay blessed, continue to stay prayed up, continue to prepare physically, mentally, spiritually, and emotionally. And remember to get outside and enjoy fresh air on these weekends that we do have in training, because it is good to clear your hair for your mental health, and also stay prayed up. And church and a good church community is also recommended during times as these natures. So I'll continue to update you this week. We have a bunch of earnings reports coming out, the CPI numbers and the PPI numbers. as well as the another meeting, I believe by the Federal Reserve, not related to the rate hike. So I'll keep you informed on all of that, and I'll talk to you very soon. Thank you for listening. Be sure to subscribe to your friends and neighbors and cohorts and chums. This is the channel for the interpretation of financial news, the true interpretation of financial news, as YouTube allows us to do so right now. Thank you very much. Talk to you later. Bye bye.